Hello, YouTube. Welcome to RSA Passive Income Academy. As you know, with our strategy, again, I'll repeat myself for those who are new in this YouTube channel that it consists of 80% fundamental analysis and 20% technical analysis. And the technical analysis is divided into three. You have one where I focus on statistics, and second one where I look at the pair patterns, and then the last one it is the entry model. Okay, so but of course time and space I have been testing this strategy and look at the different pairs, where they form, and which time of the day they form these pairs, and therefore I look at my entry model that I use in order to maximize my gain and also to reduce my exposure, my risk exposure, in terms of the momentum movement of the pair, just if in case I enter and it's moving in a different direction. All right, and the 8% it consists of the fiscal side of things, where I look at the government, political event, from elections, ranging from any event that influence the policy change, where the treasurer is also allocated money, where they make big announcement from um, fiscal spending to budget speech from fiscal side of thing, where treasurer have to shift money to accommodate other sphere of government, from education, funding investment, funding innovation in terms of government side, or increasing employment rate, or giving relief sort of funds to the businesses or individuals who are unemployed, right? So where I look at the fiscal side of things, and in terms of monetary side of things, I look at the political data. I look at the events where the central banks they host the media and make decision in terms of interest rate cuts and interest rate hiking. So I look at those events and I try to predict the movement of the particular pair for the long span of time, or I look at the price, where I focus on the bucket of things within that particular country, how it's going to be influenced based on the bigger scheme of things in terms of global influence, how the inflation affect the current pair of that particular country, vis-a-vis the other country that is used for that particular pair. All right. So then the next thing, I also look at employment change, and I look at other things that may influence the pair, such as changing of the influential central bank um, individuals. So if there's a big change within the country's central bank committee, then I focus on those events and see how they're going to affect the pair or the currency, right? So with further ado, like I said, I will only focus on the entry model for my overall system that I use to trade. Okay, so we focus on a 15-minute time frame, which is the more profitable time frame for me, and it is not a time frame where I'll spend days waiting for the trade to play out. So it is a time frame that's only required a couple of hours or day or two in order for me to get to my profit take it level. All right. So as you can see with my entry models, I start by outlining the price ceiling and price floors. And within the movement of the price ceiling and price flow, and the flow of the market from bullish momentum to bearish momentum, the market leave the footprint of price clutter. And from the price clutter, of course, with the market footprint, Also, it leaves the dumping zone and the collecting zone. Right thereafter, I look at the last highest price flow and price ceiling. Then I indicate my uh, construction level, construction zone, equilibrium level, expansion zone, and expansion level. Thereafter, I look for my appreciation and depreciation level. So appreciation and depreciation level, those are the entry level or entry price that I use to enter the particular pair. So as you can see, USD dollar versus Japanese yen, I haven't indicated price appreciation and depreciation level. So I'll be waiting for the price swing in order to indicate to me where is the momentum shifting towards. All right, and thereafter I'll be looking for entry. For now, as you can see, this market is currently ranging, and I hate ranging market because they do not have a clear direction where you can maximize your gains. So for now, I'll be waiting first for direction to form, which is the momentum swing, and the momentum swing is affected by the 80% of my system, which is fundamental analysis that I've explained earlier on. So I'll be looking for next week big days where the is economical data that is released, and then I'll try to predict the next big movement shift of momentum. Thereafter, I'll be looking for price appreciation and depreciation to be formed, and I will enter that trade, and I'll be looking to maximize my profit. Of course, the way I enter the trade is I put in a stop loss as soon as my trade get into 1:1. I shift my stop loss to break even. Then after from break even, if it's moving from 1:2, I shift my stop loss to 1:1, and thereafter I'll be moving with each and every percent that I gain to move my stop loss. Of course, with strategy being tested, back tested, forward tested, I have done this for many time, and it's more profitable way of managing the trade for me, and it's also helping me psychologically not to stress about the trade if it's going to reverse and hit my stop loss and end up losing my money. So that's how I mitigate my short-term exposure in terms of risk. So we'll be waiting for those things to be formed next week, and I'll give you feedback. But for now, let us trade, let us make money.